Hi traders, welcome to compression video number 2. Before we get started, remember that The5ers is a proprietary trading fund that funds Forex traders and offers a great opportunity to trade risk-free since you can trade our money. If you want to receive more information, subscribe to our YouTube channel or to our newsletter and visit our website, the5ers.com. Now, remember in video number 1, we talk about compression. We explain how it looks and what is it and what causes, what are the reasons that causes compression. In this video number 2, we're going to talk a little bit about how to take advantage of compression, how to trade compressions. I won't be giving a certain strategy, but I will give you some principles that you need to follow or you should follow, so you can build a strategy about these principles and take advantage of compression movements. So the first and most important principle about compression is that you want to trade against the compression. Okay, if the compression movement is going up, you want to look for opportunities to sell the market. If it's going down, you want to look for opportunities to buy the market. Now, where do you want to buy or sell the compression? This is how we're going to try. This is going to be the second principle. You want to look for close resistance or support levels because we don't know where is the compression going to end. So the most probable point for it to end and turn and lastly break to the other side is close to resistance or support levels. Remember, compression is a movement without pending orders behind. So in the moment that it finds support or resistance important levels, it will break to the other sides most likely. Okay, this is not 100% sure like anything in the market, but if you want to be in the good side of the trade, you want to be trading against the compression movement. So in this example right here, we see, let's try to read the market together. We had this important movement. From this down movement, we have kind of a pullback. Okay, now look at this pullback right here. This is a healthy pullback. We have 130, roughly 30 pips in 5 bars, in 5 candlestick. Then we have another retracement, and then we have this compression channel right here. Now this right here, look at this. It moved the same 130 pips, but now it took 21 bars. So it took 6 times or 4 times, 4 times for price to move the same amount of pips, but in 4 times the time that it took last movement. So once we identify this compression right here, we want to try to sell it. Now, where we want to look someplace to sell it? We look for resistance levels. Now we have a resistance right here, and we also have a resistance all the way up here. Okay. So in these levels, we have to build a strategy around these levels. So at this point, it's up to you how you're gonna try to sell it. You can look for outside candles. You can look for pin bar candles. You can look for different patterns forming near these resistance levels. You can just fade it and sell and sell at market, or place some sell limit orders, and maybe placing your stop loss order just above the resistance levels or something. How you're gonna trade it, it's up to you. You can build a strategy around this principle, but the principle is you want to trade it against. And look what happens once it finds resistance up here. It just breaks all the way down here, moving 200 pips. Okay, it's a very strong movement to the other side. Okay, so this would be example number 1. Let's find another example. Okay, same here. We look at the USD franc, and we see another channel, compression channel. You can spot this up and down candlestick forming. We identify a compression. We look for support levels. We have an important support right here, and we have another support, of course, down here. Okay, so this would be the levels to look for opportunities to buy. And again, we can just buy limit orders or look for some candlestick, maybe going to a lower time frame to look some patterns that tell us it's going to break to the other side. And once it breaks, it just breaks all the way to here. And if we would let it run, obviously, we would have profit even more. But this first movement, remember the compression already took all the pending orders with it, so there's nothing to stop this aggressive movement to the upside. So principle number 1 and the most important, trade against the compression. Principle number 2, look for buy or sell opportunities near support or resistance levels. That's the most likely places for it to end. And now 2 little more points to remind you. If you find yourself in a trade and you identified your trade is compressioning, okay, you find yourself inside a compression, you might want to adjust your stop loss or reduce exposure. You want maybe to close the trade, because it will cost you a lot of emotional headache and emotional roller coaster watching these candles go up and down, up and down, up and down, and not making any profits out of it. So you be aware of that. And lastly, the compression, once you find it, identify it, and trade against, it will very soon go in your favor, and that will allow you a lot of relief and a good opportunity to maximize your profits, because very quickly it will go in your favor. So it will let you get a 2-to-1 reward or 3-to-1 reward risk ratio very quickly, and you can you can make it a risk-free trade. Adjust maybe your stop loss level or something, and just let it run and try to maximize your profits. Before we wrap up, just let me know some comments. Let me know, how would you trade the compression? What is your strategy around compression levels or movements? And let me know in the comments, and we can have a little chat over there. Before we sign out, I want to remind you that I will leave you another link to find out more about us. Remember, those who want to learn more about our funding process and growth process, watch our video. The link I will leave you right here. And thanks for joining. I will see you in the next video.